Bitcoin just exploded again. But this isn't random hype. Behind this surge is a wave of deep, strategic moves. ETFs are pouring in billions, new laws are rewriting the rules, and everyday people are getting easier access than ever before. From Wall Street to Washington, and even global unrest. This July 2025 pump is no accident. In this video, I'm breaking down the 8 top reasons behind Bitcoin's latest breakout. And trust me, it's bigger than you think. But what's really fueling this rally? And is it just getting started? If you're serious about crypto, investing, or building long-term wealth, smash that like button, subscribe, and tap the bell. Let's get into it. Number 1. Institutional and corporate adoption. Bitcoin's latest surge isn't just retail hype. It's being driven by the world's most powerful financial forces. Since the approval of spot Bitcoin ETFs in early 2024, traditional finance has opened its doors to crypto in a way we've never seen before. These ETFs offer a simple, regulated path for institutions, including banks, asset managers, pension funds, and insurance companies, to gain exposure to Bitcoin without directly holding or managing it. That's huge. Billions have flowed into these products in just months, and they're quickly being integrated into mainstream financial portfolios, from 401(k)s to retirement funds. For the first time, Bitcoin is being treated as a legitimate long-term asset within the walls of Wall Street. But it doesn't stop there. Corporations are also getting in. Take MicroStrategy, a company that's become almost synonymous with Bitcoin. Their strategy of raising capital through stock or debt and using it to buy BTC for their corporate treasury has set a precedent. And they're not alone anymore. More public companies are following suit, holding Bitcoin not just for speculative reasons, but as a hedge against inflation, currency devaluation, and the uncertainty of traditional markets. What used to be an unconventional move is quickly becoming a serious financial strategy. This signals a massive shift. Bitcoin is evolving from a fringe asset to a core part of corporate finance. Even beyond the purchases themselves, the infrastructure around institutional and corporate adoption is maturing rapidly. Auditors, custodians, and compliance platforms are building the rails that allow enterprises to securely and transparently hold BTC in full alignment with traditional financial regulations. All of this points to one reality. Bitcoin is no longer just a bet. It's being positioned as financial infrastructure by some of the largest players on the planet. And that changes everything. Number 2. Favorable regulation and strategic policy shifts. One of the biggest barriers to widespread crypto adoption has always been regulatory uncertainty. But that's starting to change. The current U.S. administration has signaled a shift toward a more pro-crypto stance, introducing policies that aim to integrate digital assets more fully into the financial system rather than push them to the fringes. Most notably, a recent executive order to establish a U.S. strategic reserve of cryptocurrencies has helped solidify Bitcoin's image as a sovereign-level asset. This move not only boosts legitimacy, but also positions Bitcoin as a strategic component of national economic infrastructure, similar to how nations treat gold reserves. In Congress, proposed legislation like the Clarity Act, which provides guidelines for classifying crypto assets, and the Genius Act, guiding and establishing national innovation for U.S. Stablecoins Act, which focuses on stablecoin oversight, signal a push toward creating a transparent, rules-based framework. These efforts are designed to reduce regulatory ambiguity, protect consumers, and give institutional players the green light to engage with crypto confidently. Clearer policy equals greater participation. With government support growing and legislation maturing, the regulatory environment is quickly transforming from a headwind into a tailwind for innovation and adoption in the Bitcoin space. Number 3. Bitcoin as a hedge, inflation, digital gold. Bitcoin is increasingly being recognized as a powerful hedge in today's uncertain economic environment. With global trade tensions escalating and the US dollar showing signs of long-term weakness, investors are looking for alternatives that can protect their wealth and Bitcoin is stepping up as one of the most compelling options. What sets Bitcoin apart is its fixed supply of 21 million coins, a built-in scarcity that makes it resistant to inflation by design. Unlike fiat currencies that can be printed endlessly, Bitcoin operates on predictable issuance and decreasing supply growth over time. This has earned it the nickname digital gold, and for good reason. Gold has historically been the go-to store of value in times of crisis, but Bitcoin is now challenging that status. Its annual inflation rate is already lower than gold's, and with every halving cycle, Bitcoin becomes even more deflationary. For investors worried about currency debasement, Bitcoin offers a modern, digital alternative that is borderless, decentralized, and outside the control of any central bank. The narrative of Bitcoin as a hedge has only grown stronger with recent market behavior. In mid-July 2025, Bitcoin broke out of a months-long consolidation phase and surged past the $120,000 mark. This wasn't just speculation. On-chain data showed a significant drop in exchange reserves, signaling that more investors were pulling Bitcoin off exchanges to hold for the long term. This kind of accumulation behavior suggests increasing confidence in Bitcoin as a reliable store of value, not just a volatile trade. As fears over inflation, interest rates, and monetary instability continue to rise globally, Bitcoin is no longer just a speculative asset. It's becoming a strategic tool for capital preservation. Its position as a digital hedge is strengthening, and for many investors, it's starting to look like the gold standard of the 21st century. Number 4. Technical breakout and on-chain momentum. In mid-July, Bitcoin shattered a key resistance level, breaking out of its consolidation range and surging past the $120,000 mark. This breakout wasn't just a random spike. It was supported by strong technical patterns and a wave of on-chain indicators signaling a healthy, sustainable rally. One major signal comes from declining exchange reserves. Fewer Bitcoins are being held on centralized exchanges, suggesting that investors are moving their holdings to cold storage rather than preparing to sell. This trend often signals growing confidence and long-term accumulation, an important bullish indicator. Other on-chain data points, such as increasing wallet addresses with significant holdings and higher hold ratios, show that large and long-term investors are doubling down rather than exiting the market. This accumulation phase is historically linked to major price surges. Combined with bullish chart patterns and trading volume breakouts, these metrics point to more than just speculation. They signal deep on-chain momentum driving this rally. The technical breakout reflects a broader market sentiment shift, and if this trend continues, Bitcoin could be entering a new phase of long-term growth. Number 5. Retail adoption and infrastructure growth. Bitcoin is no longer a niche asset understood only by tech-savvy early adopters. Thanks to rapid improvements in user-friendly platforms and mobile applications, it's becoming easier than ever for everyday people to buy, sell, and store cryptocurrency. Apps like Cash App, Coinbase, and Strike have simplified onboarding, allowing users to interact with Bitcoin in just a few taps. At the same time, infrastructure supporting real-world usage is growing steadily. More merchants across the globe are beginning to accept Bitcoin as a form of payment, both online and in-store, thanks to services like BitPay and integrations with payment processors like PayPal and Square. Bitcoin ATMs are also popping up in cities worldwide, making physical access to crypto a reality for many. On the institutional side, the development of regulated exchanges and custodial services is helping bridge the gap between traditional finance and crypto. These platforms offer greater transparency, security, and compliance, critical factors for attracting professional investors and large capital inflows. As this infrastructure matures, Bitcoin becomes not just a speculative asset, but a usable, integrated part of the financial ecosystem. This growing ease of access and trust is fueling retail adoption and paving the way for mainstream use. Number 6. Network maturity, Lightning, Halving upgrades. Bitcoin's network is evolving beyond its early limitations, and we're now seeing the emergence of a far more mature, capable ecosystem. One of the most transformative developments is the Lightning Network, a second-layer solution designed to dramatically increase transaction speed and reduce fees. This makes Bitcoin more practical for small, everyday payments, helping it move closer to being a true digital cash system, not just a long-term store of value. Simultaneously, the broader Bitcoin infrastructure is becoming more sophisticated. Custodial services, payment platforms, and integration with financial tools are maturing, offering users safer, smoother, and more reliable experiences. This maturing ecosystem is critical for both retail and institutional participation, providing the trust and usability that mass adoption demands. On the technical side, Bitcoin's core protocol continues to receive periodic upgrades focused on improving scalability, privacy, and efficiency. These upgrades, while subtle to the average user, strengthen the network's long-term resilience and competitiveness against other blockchains. And then there's the 2024 Bitcoin Halving, a scheduled event that cuts block rewards in half and has historically triggered long-term price appreciation due to supply shock. While the latest halving has already occurred, many analysts are closely watching its delayed effects, with some predicting significant upward momentum into 2025 and beyond. Together, these technical and infrastructural advances are reinforcing Bitcoin's position as both a powerful digital asset and a maturing financial technology. Number 7. Financial inclusion and remittance use cases. Bitcoin is increasingly being recognized as a tool for financial inclusion, especially in parts of the world where access to traditional banking is limited or expensive. In many developing countries, people face high remittance fees, long transaction times, and unreliable currency systems. Bitcoin offers a decentralized alternative, allowing users to send and receive money globally with lower fees and faster settlement times. This is particularly powerful in the remittance sector. Millions of people working abroad send money home to their families, often paying 7 to 10% in fees using traditional services like Western Union. Bitcoin dramatically reduces these costs and eliminates the need for intermediaries. In fact, Bitcoin ATMs are becoming more common in remittance corridors, enabling families to receive funds quickly, even in areas with limited banking infrastructure. Morningstar reports that the use of these ATMs is expanding rapidly, streamlining cross-border money transfers. Beyond remittances, Bitcoin is empowering the unbanked and underbanked by offering them access to a global financial network. With just a smartphone, individuals can store value, make payments, and preserve their wealth, especially in countries suffering from hyperinflation or capital controls. For many, Bitcoin isn't just an investment, it's a lifeline. As adoption grows in these practical use cases, Bitcoin's role shifts from being a speculative asset to a real-world solution for financial empowerment and inclusion. Number 8. Geopolitical tensions driving demand. In a world of increasing uncertainty, Bitcoin is gaining ground as a geopolitical hedge. As global trade tensions rise, energy markets face disruption, and political instability escalates in key regions, investors are turning to non-sovereign assets that sit outside the control of governments or central banks. Bitcoin, with its decentralized nature and fixed supply, is emerging as a digital safe haven. Much like gold, Bitcoin is now being viewed as a store of value during times of geopolitical stress. When traditional financial systems look shaky, whether due to sanctions, inflationary policies, or conflict, Bitcoin offers an alternative that is borderless, censorship-resistant, and independent of any single nation-state. We've seen this dynamic play out in real time. During major global events, such as wars, sanctions, or currency crises, Bitcoin's price often responds in tandem with shifts in investor sentiment. Analysts are increasingly tracking Bitcoin's correlation with geopolitical developments, noting how market anxiety can drive capital into Bitcoin as a form of protection. This evolving narrative strengthens Bitcoin's role not just as a speculative asset, but as a strategic one, an emerging tool for wealth preservation in an unpredictable world. As we've seen, Bitcoin is no longer just an experiment or a speculative gamble. It's becoming a pillar of modern finance, embraced by institutions, protected by evolving regulation, and driven by real-world use cases around the globe. From Wall Street portfolios to remote villages receiving remittances, Bitcoin is rewriting the rules of money. So the question isn't if Bitcoin will shape the future, it's how prepared are you to be part of it? If you found this video valuable, make sure to like, subscribe, and hit the notification bell so you never miss a future update on the evolving world of crypto, investing, and financial freedom. Drop a comment below. Do you think Bitcoin will outperform gold in the next 5 years? Let's hear your thoughts, and let's grow smarter together. Thanks for watching, and I'll see you in the next one.